This video covers basic financial management for artisan businesses. We're going to go over basic elements of how to manage the finances of a small artisan business. In some cases, we will be referring you to other videos in this series for more detailed information on certain topics. There are several best practices to keep in mind for managing your business effectively from a financial perspective. First, you should keep a segregated bank account and credit card for your business, and this should be completely separate from your personal accounts. Be sure you keep a history of all transactions. This will help you to prepare your monthly financials and to prepare your taxes. You should prepare monthly financial statements so you know how your business is performing. We recommend that you create a full profit and loss, otherwise known as an income statement, each month, showing your revenue, cost of goods sold, and operating expenses. We will refer you to the video on the income statement in this series if you need more information on this topic. Once you've produced this income statement, take a little time to review how your business is performing. So, as part of your monthly financial process, you will need to keep a history of where your revenue is coming from. So, you'll need to track the number of units sold for each product, the revenue associated with those unit sales, and the channel in which those sales occurred, whether it is e-commerce, pop-up stores, retail, wholesale, etc. By tracking your revenues monthly, you'll start to see any emerging trends early so that you can adapt to changes as needed. You will also need to track your expenses over time. How much material and labor are you spending by product? You can then use the average product cost to forecast your business profitability into the future. We recommend that you organize operating expenses into accounts that reflect the type of activity, whether it's salaries, supplies, travel, rent, etc. By tracking revenues and expenses on a monthly basis, you will be able to monitor the financial health of your business, understand what is driving your business performance. You will have a baseline to forecast and plan future business performance. And you will have everything at hand to create a business plan when you want to apply for a grant or a loan. You should also be keeping a close eye on your cash flows. We recommend that you use an accounting system that will allow you to create a profit and loss statement, but also track and monitor any accounts receivables that are due in the future and any invoices that will be coming due for payment. This will allow you to understand not only your cash balance, but what your future cash position is likely to look like, and where you may be running into any cash crunches. It is possible to monitor your cash flows without using an accounting system. So if you're a very young startup and you really don't want to start paying for an accounting system, you can track your cash flows using Excel files. If you do that, make sure that you track all open accounts receivables and any future payment obligations. In Excel, you can easily sort those by the week they are due, and that can help you to forecast your cash needs. You can use this information to estimate what your weekly cash needs will be in the future. This will prevent any surprises in cash management and will give you guidance as to whether you may have excess cash that you can invest into the business. It's also really important to be aware of your margins. Your margin is the net amount that you make on the sale of a product after subtracting product costs for material and labor from your unit revenue. A business with strong margins will grow profitably much faster. We really can't emphasize this enough. Margins are the single driver of cash that will fund all of the costs of running your business. We have a separate video in this series on the topic of margins, and it goes into the calculation of margins in detail. But quickly, You can calculate the margin for each of your products by simply subtracting labor and material costs from the product's price, and then you divide that result by the price, because margins are typically expressed as percentages. Here's some guidance for setting targets for your margins. If you are a retailer selling through pop-up markets or e-commerce, you should generate at least 50% margins, but a healthy company should really be achieving margins in the range of 60 to 80% at retail. If you are selling wholesale, you should make a minimum of 50% margin, but ideally in the range of 60 to 65%. Note, if you are selling products in both channels, the end consumer price will need to be roughly the same. But keep in mind, you will be making approximately half the revenue in the wholesale channel. So it's very important to evaluate your pricing strategy so that you can make the target margin in the wholesale channel. Proper financial management of your business takes some work, but it lays the groundwork for a successful business. If you invest the time to track and monitor your revenues, costs, margins, and cash flow, you will make better business decisions, and your profitability of success will be much higher.